live on YouTube this time, just for the difference. Every now and then I try to mix it up a little bit. How was your day? What have you been up to?
So I had a couple of viewings today out in Silverstream. We just listed a 6-bedroom, 3-bathroom out there, so it's had a lot of interest, which is cool. What else get up to? Yeah, it's just in the office doing a bit of work, and I was working quite late last night putting in an office. So I set aside some family time at about 5 p.m. just to it's important in the in life, to have a bit of balance. So
that's right, have that balance. Absolutely. Awesome. So we're live. Hello everyone, Zebunisso Alimova here tonight with you, your mortgage advisor. And if I'm not your mortgage advisor, why not? No, I'm kidding. I thought that'll be funny tonight. So tonight I am joined by awesome sales agent. What are you? Real estate agent, salesperson. Hausia. Am I saying it right?
Perfect. Yeah.
Perfect. Awesome. Can you please introduce yourself? Tell us a little bit about who you are, what you do, and and then we can go from there.
Yeah, of course. Yeah, so my name is Hausia Siale. I'm half Kiwi, half Tongan. I am Nelson, born and bred in the South Island, moved to Wellington in 2016 to study. I joined the real estate industry about 9 months ago. So I'm very fresh, but I've had a background in sales, worked for a church for a very long time. And so, now I'm loving the industry so far. I came into the property market when the property market was at its very, it was at the peak. So I had rose-tinted glasses coming in, but I've since had to learn quite a few skills and realized that, things have changed since this time last year. My family and I live in Petone. I've got a wonderful wife, Ash, and a 7-month-old son, Valentine. And we fell in love with living in Petone and the Hutt Valley. So that's me.
That's awesome. Thank you so much. That summarizes very nice. So 1 son, 7 months, that will keep you on your feet. But it does get easier, trust me. Absolutely. So you mentioned you came in 9 months ago when the market was at its peak. It was easy to sell houses. You didn't really have to do much. Probably, people would walk in and say, hey, I want to buy this. And there would be multiple offers, right? So what are you seeing now?
Yeah, so I think I remember very clearly on New Year's Day, I had a property that was, I was grooming to come live probably around April. And it's almost like the property market changed on a dime. Now, usually we see the cycles going from a seller's market to a market to a buyer's market in a few months, but this one happened in a couple of weeks. So it was around that Christmas time period or just before, we suddenly realized that the change of legislation with the CCCFA, the closing of borders, things like that, just meant that the market really swung in the other direction to becoming a buyer's market, where we started to see property market prices start to drop. And right now we are kind of, in my opinion, about 70 to 80% on our way down. So we've seen a huge drop in most areas, at least 10%, especially in Wellington. And so, at the moment, what we're seeing, what I can see in the market is a lot of vendors having to change their expectation from last year's highs. And I think we're going from nuts to normal, right? We're going back to normal real estate, where it's going to take you a month or so to sell your house, and buyers have a lot of power. Yeah,
that's absolutely right. And it's funny you saying it. You're probably listening to the same economists. I've just come back from the conference Mike Pero had for us down in Christchurch, and we had an economist there from Infometrics, and he was saying basically that we're sort of 2/3 through the slump that we're going through. So hopefully a little bit more to go, maybe, and then hopefully things should just plateau like they did a while back. So a lot of clients were asking me, is it going to be like 2008? Is it going to be worse than 2008? Are the prices going to completely bottom out? A lot of economists, even Tony Alexander and a few others, are saying, no, it's actually not going to be that pessimistic. It's not going to be that bad. It's just going to go a little bit more and then correct itself. And then hopefully according to the charts, is 2023, 2024, we should go back up again. And I was being cheeky and asked the economist, I said, is it when the government changes? And he goes, oh, no, we didn't base it on that. So, but I mean,
Yeah, it's a good point, Zebunisso. You bring up the GFC, right, 2008, and I think a lot of people make comparisons to that when the market starts to drop. But the thing about 2008, right, and the difference we've seen is if we look at pre-COVID, from this point to pre-COVID, we're still up 15, 20% in the market, because the pre-COVID, from COVID to late last year, the median sale price in New Zealand went up around the 30% mark. So you've got a sharp increase. Like if you look at the market over the last 30 years, you've kind of got gradual, and then it's been really sharp in the last 5 years, 2 to 5 years. Yes. So then the drop we've seen is more of a correction, right? Because it's not crashing, because if in 2006, 2007, if we look at the property market there, we're not seeing that giant spike like we have seen before the correction we're in now. So for a lot of buyers who are thinking, oh, great, this is, a great chance for us to get in on the market. It's true, because you've captured all that growth in the last 5 years, but now you've got the ability to jump into the market while it's at, like you say, at a lower point.
Yeah, exactly. And I was having a conversation with a couple of my clients at the moment where they're saying to me, what should we do? Should we just wait it out, or should we buy? What should we do? And it's really interesting. Again, going back to that economist, he was saying, the biggest winners and losers. We always try to look every time the market changes. We always try to look who are the biggest winners, who are the biggest losers. At the moment, it seems like the biggest losers probably are your flippers. So the ones that bought the properties maybe 6 months ago, looking forward to do a quick reno and flip it and make some money on it. So that would be our biggest losers at the moment. And the strategy now is really to hold. So if you are holding for a long time, then it doesn't really matter if you buy now, if you buy in 2 months' time. Because eventually, if you're holding for long term, over 5 years, 10 years' time, you will be back in the same position. So if you are a first-home buyer, or if you're a mom and dad investor looking to get a second property or so, now is probably the best time to buy.
Yeah, totally.
In my opinion. It's not, quick disclosure, it's not a financial advice. All advice is general in nature, and if you do need personalized advice, do reach out. Yeah.
I've got the liberty of not having to give such disclaimers. I'm telling you right now, guys, this is the best time to buy. And Zebunisso, I've got 10 quick fire just points on why I think now is a great time to buy. I was wondering if I could just rattle those off, and then maybe we could field some questions, or you just talk about it.
Yeah, absolutely.
Cool, guys. So number one, and if you're taking notes, this is the time to take some notes, because these are tried and true. We've got these from some really reliable sources. They've come from REINZ, CoreLogic, a couple of economists that we work with, a guy called Tony Alexander, who we've talked about already. So the number one reason to buy right now is the best time to buy is always when you can negotiate when the market's on a decline, right? So we talked about a plateau coming up. A lot of buyers are thinking, I'll just wait until it bottoms out. The thing about that is that vendors are going to be less negotiable when their property is at the bare minimum. They are going to be willing to negotiate when the market's dropping, right? Let's say 4 months ago, the property was worth 800,000, but now it's worth 720. Right. So if they're seeing decreases of sometimes up to 4% every couple of weeks, they are going to be wanting to be more negotiable as the market is going down. And the second thing to that one is that the only people that we're seeing putting their house on the market, they acknowledge that they're not going to be making too much money. They're putting their house on the market because they're going through a separation. The kids are moving out. They're wanting to upsize, downsize, changing location. It's all situational. So that's really important as well, because the want to sell people have now moved out of the market or have been burnt and are just, at a stalemate. But the need to sell vendors are still in the market. Number two, there's 157% more listings in the Wellington region than there was this time last year. I think that number has actually gone up as well. Yeah. So if you're looking into the market, you have got not double, more than double the amount of options out there to choose from. And that's really important, because as a vendor, if I'm selling my house and I don't have 4 comparables, I've got 40 comparables, I'm going to be really negotiable with a buyer that wants to come to the table. Number 3, investors we've seen are pulling out of existing residential properties. What's due to that? 1,000 different factors, but the main one is the interest deductibility. All right, so the Labor government has pretty much set out a plan to make it really difficult for an investor to keep long-term rental properties because they can't use the interest as a deductible expense. So what that means is that first home buyers with a pre-approval are ruling the market. All of those existing properties that maybe a little bit old, need a bit of potential that an investor would usually buy are now being controlled by first home buyers who suddenly they can get 20% more because, you know, they're working with a great mortgage broker, or, you know, like they're actually able to increase their serviceability and they're able to capture those ones as well. Number 4, 99% of agents work for you for free, right? So 99% of agents that I know, and myself included, work on behalf of the vendor, so they get paid by the vendor. Similar to a mortgage broker, 99% of mortgage brokers, right, are going to work for you for free because the bank is going to pay them. So because of that, you can like think of a real estate agent like a lemon. You can squeeze them, you can get them to do all of your negotiating for you, all of that work to find conjunctionals with different listings so that they can act on your behalf as well with another agency. That's really important. But yeah, that's a great free service that they're offering you. Number 5, on average, right, properties in New Zealand have a 7% growth per annum. So over 10 years, they double. That's been the same for about 100 years, give or take. You know, I think it's maybe 80% accurate. So some properties will do more than that. Some properties will do less than that. But on average, the trend is up and to the right. Okay. So buying property at the right time it's more important that it's the right time for you and less important that it's the right time for the market. Make sure your ducks are in a row, have a good chat to a mortgage advisor, get a big deposit together, talk to your parents, talk to a friend, buy together, get creative. But in the long-term scheme of things, if you're thinking about inheritance or your kids or an investment in the future, it doesn't matter what time you buy, it just matters that you buy. It's not about timing the market, it's about time in the market, right? Okay, number 6, property is an inflation hedge. Okay, so inflation has gone through the roof, 16, 17%, whatever people have been saying. But property is a great hedge against inflation. You put your money in the market, it's going to work for you over time. Number 7, incoming 200,000 special residency visas. Okay, so that's a lot of new migrants that are coming into the country. They're going to be coming in fast and quick. And where are they going to live? They're going to need to buy property. So buy it first before they can. Not trying to be, mean, but this is your portal where you are a New Zealand citizen or you've got a special residency here or whatever it is. Use that. That's your ticket into getting on the ladder before anyone else. Number 8. Buy before interest rates increase. Okay, so we've seen a big increase. Let's just be honest with ourselves, though. Ask your parents what their interest rates were. My parents, it was over 15%. So the average, I think, is around the 7% long term. So we're still under that. But look, if you're wanting to buy when the market is at a drop like we're in, and before the interest rates are going to increase even more. It's just going to affect your ability to get a better pre-approval. Okay, number 9, 2 more left. Number 9 is that job security is at an all-time high. Okay, so if you're actually thinking about serviceability long-term, what we're seeing in New Zealand is that there is a huge demand for especially like labor-intensive jobs, bricklayers, builders, plumbers, carpenters, things like that. And what we're seeing because of that is that job security is really high. Employers want to hold on to their employees because we're seeing a big demand for jobs. And number 10, the final one is that the Kāinga Auto First Home Grant, the cap has been lifted for the Wellington region, right? So we've talked about this before, Zebunisso, but it is wild to think about the amount of properties that now fit in this criteria. The new cap for a new build, for example, is 925. Now, I think you would struggle to find a 2-bedroom for over 925 in the Wellington region. That's a new build. You're going to find probably a few in the 3-bedroom space, especially in the Wellington region. But really, like if you're looking in Lower Hutt, Upper Hutt, that's going to be a big catch-all for every single new build. You're going to be able to get the first home grant. What is the first home grant? It potentially means that you could get up to 20K for free, right? I won't go into more, but yeah, and then 750 for an existing. So you know, for example, in Stokes Valley, I've sold a house there. I've sold a couple. One we worked closely with Zebunisso, and the property market has dropped nearly 30%. Like in some areas, 35% in Stokes Valley. What does that mean? That means you can get 4 bedrooms for under 750. Yeah, so it's crazy. Those are some 10 reasons, but I just wanted to chuck those out there. And yeah,
that was awesome. You did half of the job for me, my friend. This is great. Some of that sort of stuff I was going to cover myself, but you did it for me. So this is great. Yeah, thanks. I can retire now.
yeah. Well, sorry to step on your toes, but yeah,
no,
I think,
but that's good. That's good to know that, you know, us as mortgage advisors are pretty much on the same page as you guys in real estate. So it's good to know that we're sort of seeing the same things, reading the same reports. And I really love the point about the job stability as well, that comparing back in 2008 versus now, the job stability and stuff like that, the unemployment rate is much, much lower than we were back in 2008. So definitely a good indicator for a lot of people that messaged me. Actually, I had a few messages about, can you cover around mortgagee sales and what's going to happen? Are there going to be lots of mortgagee sales? I don't think so personally. And again, you know, as you said, the data shows the mortgagee sales shouldn't be happening because people should still have jobs, and if they're not happy in the job they're in, they won't have a problem going and getting another job easily.
Yeah, the only major mortgagee sales we have seen, and I think forecast to increase a little bit, is just with some developers, right? So you know, they're unable to do all of their pre-sales. They start a project and now they actually, you know, go bankrupt, or they need to sell some of that stock. So that's another thing as well, like new builds, especially 2-bedroom townhouses in Lower Hutt, for example, which is a huge market. You've got over 400 properties there set to confirm this year. So that's like essentially a big it's a very competitive space right now. So you can negotiate, right? So even if you see a price online, $699 for a 2-bedroom apartment in Karori or in Kandala or whatever it is, you can negotiate that price. And developers I've worked with have shown to be very negotiable.
Yeah, that's right. And the perks from the banking point of view, when I talk to my customers, is that you can still get that new build, for instance, with 15% deposit. You don't have to come up with 40% deposit for an existing property. And then the tax advantages of that is also, you know, for the first 5 years, that property you can still do the tax. Thanks, Kat. He does it. Every single webinar I do, he comes over and says hello to people. Honestly, this cat, I'll have to lock him up next time. Yes, so basically we're looking at a market where we've got heaps of properties on the market. You can negotiate, and as you said it right, you buy when the time is right for you. You don't buy when the time is right for the market. Yeah. Because everyone will have their own journey. Everyone's on different life steps at the moment, I guess. So
and there's very few jobs in New Zealand, maybe apart from the Zebunisso's one, where you can out earn your own equity, you know, over time. Like, yeah, it's just like, I think 7% on $1 million over time. Like that's an incredible amount of legacy as well, right? So if you're a young, maybe you're newly married or you're a young professional, and you're looking to buy a house, like think of the amount of equity. For example, you pay off your house in 30 years, probably, hopefully less than that. But then you've got a freehold property that you're able to do a lot more with, an investment property, maybe, you know, setting up a college fund. There's so many doors that buying your first home will actually open for you, and not just for you, right? So for your family too. That was something big for me personally, is that I wanted to have a legacy, right? I wanted to leave something that's not just going to be for my kids, but for my grandkids. And I think that's a dream that every New Zealander, every person on this webinar should have. The idea that you can actually not be a burden, right, in the future, but you can be a blessing.
That's right. And I think I covered in one of my webinars, maybe last month or the month before, about building wealth for the future. As you say, you've got one kid now, you may have, a few more to come as the years go by. I've got 4 kids. So I got to have at least 4 houses. One house for each kid. So because I feel like if I don't do it now, in 20 years time, when they do want to buy a house, the property market will be so out of control, and that income to mortgage ratio will be just crazy. Because we looked at the stats back in I think it was 1950s or 1970s. It was 4 times of your salary that the mortgages were. At some point, yes, they did reach sort of 5-6 times of your salary, but now we're seeing the mortgages are crazy. They went to 8, 9, 10 times of your income, whatever you're earning. This is how much the house is. So it's kind of crazy to think about that. So cool. Should we open up a floor for some questions? Because I'm already getting some here in private chat, and see how we go. So guys, if you have any questions, as usual, just drop them in the chat box and we will answer them for you. So one of the questions for you, Hausia, is where did you get the 7% from? Can you elaborate on that?
Yeah, great. Yeah, so 7% that comes from, so for example, if you go on, I mean, it is kind of difficult. So the Real Estate Institute of New Zealand, which it has a paywall in front of it, right? So you kind of do only get access to that data if you're either a real estate agent or you're going to pay for it. But that is looking at the last 10 years and the median sale price in New Zealand. So if you jump on REINZ and actually just filter through some of their statistics, that 7% will come up a lot. And that's I do try to be nice and conservative, especially when I'm live on YouTube. So that 7% is probably going to look a little bit higher for, say, a Wellington region, especially over the last 10 years. Wellington real estate has been ridiculous, like compared to the rest of the country, second only to Auckland, So I think that 7% is really just a conservative figure to chuck at you. But the main thing to realize is that a lot of property, like the majority of property, is going to double or more than double in 10 years time.
Yeah, absolutely agree. I think just one comment about the Wellington market. I think what happened was in the past that Auckland sort of went up, but Wellington stayed relatively same. And then I think after COVID, Wellington market sort of went a bit crazy. And that's where we saw that huge rise of prices. Awesome. Any other questions? So that REINZ report, Real Institute, Real Estate
Institute in New Zealand. Yeah, so they release
Is it free?
They release a monthly report that's completely free. It also has the house price index on it, which is a really good indicator for how the property market is going. It's their own figure for it's essentially like a rating system on the property market, but it's backed up by thousands of sales in New Zealand. A transaction has to go through REINZ, so they're going to have all of the relevant data. But if you just go on their monthly reports and then back up pretty much great. So it's that bottom left one.
The bottom left.
Yep. So there's the monthly property report. Yep. And then the housing price index, but maybe start with the monthly property report.
Awesome. So I'm just showing it to our listeners that this is where you go in, and this is where you find this reports, and you can make if you're really a numbers geek, you can go through these numbers and have a look at yourself as well. Yeah,
totally. And so what we've seen in Lower Hutt, for example, is Lower Hutt is down 6.3%. The median sale price year on year. So from this time last year to today. But the thing about that is that in New Zealand, when a property goes unconditional, it's usually deemed as sold. Okay.
Sold, yeah.
Yeah. But then on average, it's 6 to 8 weeks from that point to when it settles. Mm-hmm. So a lot of this data is going on when it's settling and not when it's actually sold. So because of that, Zebunisso and I, right, we're on the cold face. We know what it's actually like on the market for people at any point in time. But a place like REINZ, it's good for what's officially settled in New Zealand, but I will see, a drop in the market. Zebunisso will see a drop in the market. You might see a drop in the market going to open homes before it officially happens, and especially when the media is saying that there's a a giant drop or of 20%, we've probably already seen a 25%. Yeah, that's important as well.
Yeah, and it's important to know that media doesn't help sometimes. I mean, they didn't help during COVID times, scaring everyone that you will miss out on a house, and inflicted this FOMO. That's when people went in and bought houses. And now the media is also going in and going, oh, recession is coming, don't buy the house, you will all end up in mortgagee sales. So it's really awful when you have all this media portraying different things that are just not really true. So be careful with that whole media thing. And yeah, get proper advice. No, that's cool. So just trying to see what other questions are coming through. I'm not gonna ask that. Okay, the question is, what is the definition of a drop?
What was the question you're not going to ask?
There was a question. What is the definition of a drop?
Yeah, nice.
I'm sure we covered that now.
Yeah, good point. Well, I mean, just to be really frank, the definition of a drop, in my opinion, is when the median sale price for a certain area goes below its 12-year average for the last, for this time last year. So, for example, in Lower Hutt, as we talked about, the median sale price has dropped. I think it's around the 815, and it was around the 864 for this time for May of last year. So that's only a 6.7% drop. But then that's Lower Hutt, for example, which is where I specialize. So I'm talking about it a lot. You've got a place like Petone or a place like Eastbourne, right? Quite sought after. These places are going to hold their value for a lot longer. But then an overpriced area like Wainuiomata, Stokes Valley, Porirua, Cannons
Creek.
Yep, exactly, right. These places which have really high rents and have been inflated in price because people can't afford to live in Kandala or Newlands, so they move out to these areas. These are going to be the first places to hit. It just makes sense because a buyer doesn't need to buy in Stokes Valley, Wainuiomata. They can buy closer to work, closer to school. Yeah. So yeah, that's what I would consider as a drop. So just clean cut when the property median sale price drops below its 12-year comparison from the year prior.
Awesome. Thank you so much for that. And this is why I love doing this webinars every month. And I have different guest speakers. Like the month before, I had someone from Kapiti. The months before, I had someone in Levin. So I have all these different agents in different regions. And it's really cool to see what's happening because each sort of area has also its own, if you delve into numbers, like for instance, says Wellington is a drop. I mean, we're in Kapiti. We haven't seen much of a drop, I think. The Kapiti prices sort of tried to stay, but then Levin prices have dropped. So yeah, it's really interesting to see what's going on around the country. So Hausia, if you were a first-home buyer right now, what are your stumbling blocks? What are you seeing through your buyers if the sales are falling through? What are you seeing?
So number one is finance. Okay, so I mean, it just makes sense. Because it's the most common condition on a sale and purchase agreement. It's a finance condition. I've seen a couple of times that people get pre-approvals. The banks just change their stress test or change their criteria, and then that pre-approval is no longer valid. Whether a bank will honor that, previous criteria is kind of, I mean, it's up to them. But what I have noticed is that getting your pre-approval for a first-home buyer, that's your first goal. It's because beforehand, it's almost like you're going to the mall and you have no idea how much money you have in your wallet, and you're going in to buy sneakers, buy an iPhone, going to the movies, and you're going up to them and saying, hey, I'd like to do this. And they say, great, it costs this much. And you say, oh, actually, give me 4 weeks, and then you have to come back. But when you have a pre-approval, at least you have the bank saying, look, if you can find a property in this price range up to this level, this is the ceiling, then I'm happy for you to put an offer in, right? I think, so that's number one, finance. So the best thing to do, honestly, guys, there's no secret as to why we're here. You need to talk to a mortgage broker. You need to talk to a mortgage broker. If you go straight to the bank, they're only going to give you, a quarter of the piece of the pie in terms of their ability to be flexible. But when you work with a mortgage broker, they have an agreement with a bunch of different banks and second-tier lenders. Zebunisso is a great example. She helped one of my buyers who was like a refugee, and they just had no hope, even a couple of other mortgage brokers said to them, look, no, this isn't going to work. And bang, Zebunisso did a magic and made it possible for them. And that's like a dream come true for them. They're a family of like 13. They've been looking for property for 3 years. So that's number one, finance. The second one I'd say is negotiating. So you come to the table and you're not able to get the price you want because you are lacking a little bit of negotiating. Just know that myself and the rest of the agents out there, they get paid by the vendor. So their fiduciary obligation is to the vendor. But that doesn't mean to say that you don't have any leverage. You absolutely have leverage. By law, let me give you some key stats that you can chuck to a real estate agent. By law, a New Zealand real estate agent must present an offer if it's put on paper. Okay, so let's say you got an open home, it's a 3-bedroom place. Let's mix it up. Let's go. It's in Miramar. Okay, and it's marketed as buyer inquiry over 800,000. Okay, buyer inquiry over 800,000. Oh, by the way, with the buyer inquiry over, legally they can't sell it for 10% more than that 800,000 because then it's false advertising. So they can't sell it for 890,000 if it's marketed for BO 800. So just know that. Anyway, if you come in and say, hey, I want to put an offer in 690 on an $800,000 house, and the agent says, oh, you'll be wasting your time. Just know that you can demand a sale and purchase agreement, and you can demand to put it on paper and present it. Okay, you can't do it for my properties. No, I'm just kidding.
No, you just gave like the golden piece of advice. I've never heard of it. Never.
Yeah.
A real estate agent be so upfront to his own disadvantage. This is great.
Yeah, well, to be honest, like it's to my advantage. I'd love for you to put something on paper because I know that we're going to be able to, that's the first thing to do. It doesn't matter what the first number is. Let's just negotiate. And the second thing is they have to present within 24 hours. So if you put it in at 7 p.m. on a Thursday night and the agent says, yeah, great, I'll get back to you on Saturday, that's against law. You have to present the offer within 24 hours. So what they're going to be using that time for, if they're a smart agent, is trying to get other buyers to come to the table and make it what they call a multi-offer. But you just need to stick to your guns. Know that, look, if I was a buyer right now, first-time buyer, and I see a number on a listing, I would not take that as the word of law at all. Okay, I would be negotiating. Remember that when a vendor gets a low offer, if it's the only offer, it's still the best offer. So yeah, those are a couple of key things, 24 hours and you have to present.
Awesome. No, that's really good. Thank you. Now, with the finance, it's a bit of a double-edged sword at the moment, what I'm seeing, because, and you've probably been seeing on the news, the major bank REINZ has just shut himself down, saying we're not going to accept any low deposit applications. Yeah. So any of our first-time buyers that don't have 20% deposit out. ASB has joined, Westpac joined, so at the moment probably I think BNZ has some funding, and there are a few other places that I think we could still squeeze people in, but I mean you have to be exceptional, you have to have amazing incomes and no debt, sometimes no children because they affect the application. So what we're seeing is, yes, it is a little bit harder, much harder than it was a year ago, getting those mortgages across the line. But I do have some good news. It's not all bleak and gloom. The financial act that came into place in December last year and killed half of our applications, it was all in the media that the banks are now going through all of your expenses and checking out, how many times you're having coffees and takeaways and Netflix and gymming and all sorts of other spending that you're having. They've revised that law because we all made a fuss about it. All the brokers came up and they said, look, you can't do that. You're pretty much not protecting the vulnerable borrowers. You pretty much kill the market now. We can't get loans across the line. So they've listened and they've changed the law a little bit. So now the banks, as of 7th of July, so next week, they're going to stop looking into your expenses and they're going to believe you. So you, a customer, if you're telling me that you only spend $1,200 on food and only, I don't know, $50 on your takeaways, or if you're telling me that once I buy this house, I'll be good with my money because I have no other choice, I have to pay down that mortgage, we will believe you. We will take your word for it. So this is happening from 7th of July. So we're hoping we will see things starting to change.
Yeah.
Now,
but the big thing there is, sorry to cut in, but the big thing there is still going to be that low deposit, lending, which is a great opportunity. Let's just change the narrative right now, guys. That is a great opportunity for you to think creatively and outside the box about how you're going to do it. I worked with someone who bought with a friend. Real simple. You hear about it, quite often these days, but they decided to buy together, and that way they both had incomes over 80,000, so they were able to sort of service a little bit more, and then bang, they were able to put their deposits together. Another thing is, like, there are more than one way to do a gifting with your parents. So for example, people might just think it's just equity, right? But no, you could do, for example, you could have them put on writing that this is a loan that they don't need to pay off until they have paid off their mortgage. That's another way, right? So your parents have a little bit of assurance, but the banks know that you're not going to touch that loan until you actually pay off your mortgage. So yeah, I think this is just a couple more ways that I think people can get a little bit more creative. Buy with another family. Like, the gap between a 3-bedroom and a 5-bedroom is not actually that big anymore in terms of price. So find your nearest favorite brother or family member or friend and buy together, maybe just for a few years until you both have enough equity, buy each other out, then split it up and get two. But yeah.
Exactly, but obviously get proper legal advice and put some protections in place. But I have seen few single parents buying together, like single mums coming together and buying, because they both came out from separations, they both had good payouts, but just not enough to get there where they want to be. So I've seen a few of those happening as well. I'm seeing some questions coming through. So I guess one is for me: any chance banks could lower their servicing sensitivity rates anytime soon? The servicing sensitivity rates have been put in place, and this is why, again, we shouldn't see many mortgage sales, because for the past 2 years, the stress rates were around 6.5%, 7%, and now they're going back up again to 7.5%, 8%. So I wouldn't. A lot of first-home buyers have been priced out due to changes. Yeah, so I don't think they will drop any service sensitivity rates anytime soon, at least not this year. I'm not seeing it, but maybe next year things might change. So, but because we're changing that expenses bit, that should help. That should help. Another one is, I have one question. If you have one investment property for 5 years, how do you decide whether you keep it or sell it? Like, the interest rates go up, the rental income may not be able to cover the interest payments as before. So again, you got to weigh up, do you have to sell, or you want to sell? I guess that's what we talked about, right? And if you're working and if you're able to cover some of those repayments, then I could suggest doing that. And for the past 2 years, I've been harping on to people is, don't take out interest-only loans, don't take out mortgage holidays, because if the crunch comes and you need to use those levers, you can't do it because you already used that. So that's why I always say to clients, try to do principal and interest repayments. So then if you're finding yourself in this situation where the interest rates are going up, but you want to hold on to it a little bit longer, approach your bank and see if you can pay interest only for a period of time.
Yeah. And we're encouraging a lot of people who have got investment portfolios and existing properties to consider new builds, because the government is trying to push investors into investing in new builds, because we need some new homes. And just remember the interest deductibility, right? It's not applying to the new builds. So, and also, deposit, that's going to be different for a new builder. Off the top of my head, and you'll need to double check this, but 40% for an existing property.
That's right. Yeah, I confirm.
Yeah. So I think, oh man, I'm just like, if I had some money and some good legal advice and mortgage advice, what I would be doing is really be putting some 10% deposits on, some of the new builds that are still being built. And then you've got 16 months to put together the rest of, your application and get approved by the bank. But yeah, I think that's a very good question, because there are some investors who have got a couple of, flats or 2-bedroom places existing, and the maintenance is going through the roof. They're not able to increase rent. Tenancy and healthy home standards are getting harder. So I would definitely be encouraging anyone just to consider new builds, because you're just going to have like the master builder's guarantee for 10 years. You're going to have all of that maintenance you're not going to have to really worry about, and then you're also not going to have trouble filling that with because people love living in new homes.
Exactly. Right, last question for the night. Going back to you, Hausia, is you showed us the REINZ report. What are the other cool tools that would benefit home buyers and the homeowners? Great question.
So there are a few. You've got OneRoof, homes.co. You've got all of the trade meets. The one thing to be careful with is desktop valuations. So let's just remember, think about it really, really logically. Homes.co is not coming to your house, walking through, seeing the new kitchen you did, seeing the new drapes, the new carpet, seeing the retaining wall that's falling apart. So we do need to just be careful with the desktop valuations for those. For example, you don't want to get your hopes up if you see a price by negotiation property, then you go on Homes and it's 1.8 million. More than likely that's dropped significantly, okay? The best tools that I would give, say, to people to use is TradeMe. That's just the number one tool. If you want property statistics, REINZ is going to be more than enough. You won't have the time in your life to review that amount of information. So that's going to be plenty. But then if you're actually wanting to see what's actually happening, TradeMe. Now, not just go on TradeMe and look at awesome luxury properties. What you do is you want to be really, really targeted and really laser focused. The way I do it is I go on my watch list on TradeMe and put my top 10 properties. These are properties I like and I want to see what's happening with them. And then have another spreadsheet and write down how much those properties are being marketed for. And then every month, update that. How many have been withdrawn? How many have had price changes? Then you're going to get an indication of actually what's happening in your market. That's the best kind of education you could give yourself. And also give agents calls. Ask them questions like, why is the vendor moving? Why are they selling? Do they need to sell? What's their bottom dollar? Do they have a preferred settlement? But I think in general, look, if you're wanting to get into the market, the best thing that you could do is two things. Have a chat to Zebunisso or a great mortgage broker, and then have a chat to myself. Have a chat to me, give me a call, and I can help you step by step with how to buy a house. It's so much easier to do it when you actually have someone on your team. That's something Zebunisso has mentioned before. She's like, let me help you, right? Let me be on your team, fight for you in those rooms, because it's so daunting going out there and seeing 2,500 listings in Wellington and thinking, how am I going to find something for me? But it's so much easier when someone can make it plain and simple for you that's actually out there in the market every day.
Exactly. And I mean, if we put it in simple terms, if you get sick, you go to the doctor. If you want to get in shape, you go and use a personal trainer. If you want a night out, you go get takeaways. You utilize different professions through your life. So it shouldn't be any different to utilize professionals like you and me, even though it looks like we work for free. But I mean, at the end of the day, we somehow get paid from someone else, but not from these people. But we work in their best interest to get them ahead in life. Now, someone just shared here a resource saying relab.co.nz. Not sure if you've heard of that one. I'm just going to share my screen. So it's this one. Yeah, Relab. Never heard of it. So good to know.
Heard of this one. This is awesome.
Something to do with properties. So people can come in here, play around. So relab.co.nz also has some property, unbiased property data. And there are different plans. So there's a free plan that you can get, apparently, and then a paid one. So
cool.
Helps you.
Yeah, I'll look into it. Thanks for sharing that, guys.
With different things. Well, there you go. There you go. We've learned something new today.
Exactly. I learned from you guys.
Yeah. Hausia, thank you so much. You're an absolute legend. It was awesome to have you. And I think you and I should do a live one together as well, either in Lower Hutt or in Kapiti, wherever. Happy to do that and do a bit of a stand-up.
yeah, totally. We've got to get you back on the podcast as well. Just for any first-time buyers out there, if you just go on Google, Apple Podcasts or Spotify Podcasts. Sorry, just doing a cheeky plug here at the end.
That's awesome.
And just search On the Ladder. On the Ladder, it's a simple podcast. It gives you guys a few more tips on, we hear from a bunch of people who are helping people get on the ladder. And what that means is you're getting into your first home and it's easy listening. So, you're driving to work, driving home, driving the kids around, whatever, chuck it on 10 minutes. And I hope you enjoy it. And Zebunisso features on it as well, which is cool.
I was your first. I'm
first
very
guest.
proud to say I was the first. And obviously that didn't scare people and you carried on. So that's good.
Yeah, we had a lot more views, listens that podcast in particular. So
wow.
Yeah.
Well, I say if the market turns and if I can't get people mortgages anymore, then I'll just turn to radio.
Yeah,
nice.
My
voice.
Totally. Yeah, do it.
Thanks, Hausia. That's awesome. So, hold on. Sorry, now that you mentioned On the Ladder, how often does it come out?
Yeah, so we're trying to release it every week, but it's going to actually be a lot more frequent than that moving forward. We're going to release one tomorrow, but usually you could expect them sort of every Friday from this point on.
Cool. So On the Ladder on Spotify or Apple.
Yeah, anything you listen to podcasts on.
Okay. Awesome. Cool. Hausia, thank you so much. Get back to your family. I appreciate you spending Thursday night with me here, sharing your knowledge. Some of the advice that you gave, as I say, I've never heard a real estate agent say that. So thank you so much.
Thank you. And thank you to Sun Girl. Thank you to Firas. Thank you to Amber, Vera, and we've got Xingyu, I think is my wife's Chinese, so you have to forgive me. I'll try and learn my pronunciation a little bit better. But thank you guys so much. I really appreciate jumping on there, and as always, Zebunisso, thank you so much for the time.
Thank you, my friend. Thank you. And okay, cool. You've got cheers for that.